Ben, what are you talking about?
We talk about silver a little bit, and I also want to talk about the meta a little bit. Mm. It's crazy. It's crazy. Also, like how like 2 weeks ago, bottom's falling out, and then now it's just game back on. Carvana back $400. Tesla $450. IWM highs. Like just boom, we're back. Just quick.
That was yesterday. Today, not so great.
No, I
Not
know. I'm
so
just
great.
I
I
hear
don't
you.
know.
I'm just saying that it happened fast. It's crazy how this market reprices like risk on when the dollar goes down and things chill out a little bit like so quickly. It's amazing.
That is. So
To me, people look at the Mag 7 as the overvalued bubble shit. It's not even close. It's all that garbage. That's what's the grossest overprice in the
Like
stock market.
Carvana. Well,
It's
I
so-
think Tesla. I think Tesla is wildly overpriced. Of the
right.
Mag 7, by far the most egregious. Would you agree?
Yeah. It's just. I mean, that's always been that way. Like, there's there's this semiconductor company I looked up, and or this optical company. It was flat for 7 years of revenue. They got a little product cycle now with AI. It's 13 times sales, 13 times revenues. I mean that's nuts. It's a pin compatible product for Christ's sake. You know, it's just all these
Yep.
second tier. It's these second tier second and third tier high growth companies that have these growth product cycles or whatever they're on. It's it's former Lululemon and Nike type stocks. It's they're way more expensive today than Nike was. Well, almost than Nike was at its stupidity heyday of 60 PE.
Well, we have a lot to talk about today, and we're closing in at the end of the week. I mean, feels like a long week this week. I don't know about you guys, but this week seemed like I think we should go back to the Thanksgiving weeks, schedule. The 4-day work week, maybe 3-day work week.
3 days. Why would we work more than 3 days? Let's go to the 3-day work week. I agree.
And trading, just make trading a 4-hour window. I know they're trying to make it 24 hours. Make it a 4-hour window. Chaos.
I like my 5 days of trading. I'm addicted to it. So I would trade 6 days a week. I'd open the market on Saturdays if I had.
Well, there's a market called crypto where you can trade 24 hours if you're really interested in trading all the time, Robert.
I got to trade an asset that I don't understand.
No,
I
you
love
don't
the
understand.
weekends. I would never want the weekends. I couldn't trade crypto because of that. I need the weekends to just relax for a little bit and not be like checking. It's always omnipresent, the market. You're like, oh, what's the market doing? It's like always in your head.
So I have a question for you, Ben. Before we kick off officially, since I didn't tweet out that we talk about Bitcoin, do you think this Bitcoin move down and then off the bottom is a head fake, and that we're going to? And I know no one can really predict Bitcoin price because it's hard to say, well, what's driving that price. But do you think that? Oh no, we just test bottoms. If you look at the long-term chart, it kind of keeps going up, and it's a limited asset. Or do you go, no, this was a head fake. Be ready for the next drop.
Wait, you're saying the head fake like in yesterday's rally was the head fake?
Yeah, exactly. That we
or
went
or
off of 80. We went off of 86 to 92, and okay, it's back on an uptrend. What do you think is happening here? Again, I know that this is the last thing people look for us for because we all admit we don't know what Bitcoin's going to do. But
So I guess my view is like this: is that Bitcoin has for a long time been a proxy for liquidity. And if we go back over October, from October 8th, when we had that day when the market was down 4%, the NASDAQ was down 4%, and there was a huge deleveraging in crypto. Um, that crypto market hasn't really, it's not been the same since then. And it just kind of shows you how much underlying leverage there was in propping up the prices. And then you saw the most speculative stuff in the stock market as well, kind of been on sale since then. And so I think they're kind of the same thing. Like I think the leverage structure we've gone into some deleveraging. Now we've had a nice rally, but like I think yesterday was mostly about Vanguard allowed their custodian accounts to buy Bitcoin, and so Sunday night could have just been the actual head fake, like, oh, let's jam it down on some headline that MicroStrategy said they would sell Bitcoin if they needed to, because when your stock trades below NAV, it doesn't make sense to sell the stock in order to pay the preferreds guys, and so it's this dilutive. So it'd be better to sell the actual Bitcoin. But like, I think that Bitcoin has some micro strategy risk in it. Of like, I think the market's concerned that is a bit Ponzi esque, and there could be a scenario where those guys have to be selling Bitcoin, and since there's no cash flow in Bitcoin, you don't have that natural appreciation the way you would at the bond, for example, or so you have the risk of you always need more flows in, and if the flows are just the same rate, then actually it can start going down. Like I don't like just like Ponzi dynamics work like that,
Yeah,
or
yeah, yeah.
bubble
What you're
dynamics.
saying is it's a mark-to-market Ponzi scheme where if you don't have the flows coming in, all of a sudden people are less likely to buy the stock in that Ponzi scheme. And I'm not calling Bitcoin or MicroStrategy a Ponzi scheme. I'm just saying that's sort of the mechanism that you're describing. But let's talk about what we're going to talk about today. So let's see. Should we go first? Robert, you look so relaxed down in a sunny place and a Hawaiian shirt. Hawaii, I would say Polynesian shirt. I don't know if it's Hawaiian exactly, but let's, it's just
I'm
nice and
good with that.
relaxed. It's
I'm
like
good either
3
way.
degrees here, 3 degrees here in the Northeast today. But let's talk about Oru Medical and KRMD. It's been a good
Yes.
one.
Yes. Well, yeah, two longs and all three longs. Two are interesting. One is problematic. So I'll do an executive summary. Koru Medical has been a decent stock. They've done very well. Accelerated revenue growth into the high 20% range. They did that without any new drugs. They make a subcutaneous infusion pump and and consumable system with the needles and the tubing that gets the drug from the pump to your stomach. They grew 27% year over year last quarter, which was a major acceleration without any new products in the last 12 months. Simply 10% market growth plus market share gains, plus taking an entire country by storm in pre-filled syringes in Europe. So it just goes to show how much opportunity is there. The CEO does not present often. She presented yesterday at Piper Sandler or 2 days ago, and it was more bullish than I imagined because they have two or three more organic revenue growth sources that she disclosed for the first time publicly. And I took my numbers from 20 to 25% organic sales growth for the next 3 to 4 years to 25 to 30. So if they could grow 30%, what do you triple the business in 5 years at 30% compounded, I think. So, it's a $40 million business now. It could be 120 million, and it's a small company, but it trades at 5 times sales, which makes it expensive. But as I tweeted, a business with 65% gross margins growing 30% a year deserves to be expensive. So 5 times sales is very common for companies that grow even more higher valuations. And it's in healthcare. And as David, a healthcare guru, knows, not many healthcare companies can grow 30% organically, period, if any. So this to me deserves to be as overpriced as you can get. So I'm not selling a share. This is a compounder I think I could hold for 5 to 10 years. So the
Yeah.
news is good. They have 7 new products in the next 2 years, new drugs, and they have perhaps a new indication that could triple the business by itself, and that's doing cancer treatments. They don't consider that a drug. So if they get oncology, it's a step function increase in TAM and sales. So there's a lot
Yeah,
of excitement.
for people who don't know, when you say there are new drugs, it's not like a biotech where it's risky. Well, of course, small cap companies are risky. So I'm not trying to say they're not risky, but they're not inventing the drug that the pumps are going to be used in. Their part of the invention is already done. So it's
Right.
going to so the innovation risk is much lower. It's really all on, hey, can these partners get their drugs approved? And since they have a whole group of them, they don't need everyone to hit. So um, so it's not as though the new drugs coming out are something that are as risky as a biotech company, at least in my view.
And David, I sort of skipped the overriding premise of all of this, and that is that the drug companies are starting to formulate their liquid drugs. We called them IV drugs in the past because that was the only way to get them into your system. Had to bypass your stomach because your stomach would ruin them. There's 1,000 drugs in development today for subcutaneous delivery, and these guys have a niche. So they're only good for about 20%, but 200 drugs. They're even talking about co-labeling drugs. So they're going to the drug companies and they're asking if the drug companies would want to co-label it. So when they ship the drug, they ship it with their delivery system. So they would get 100% market share once the drug was sold without doing anything. If that happens, Katie bar the door, especially if there's some big drugs. So a lot of upside because potential period of explosive growth. So I'm still
All right.
long. I haven't sold a share. I haven't even done my. It's almost. It's up 150% in a year. I haven't sold a share. I haven't even done my sell 25% at 3/4 of my original investment because I don't even want to give up a share of this. So
I can attest to that because on my screen I'm up 149.34% on it, and I didn't know this company before you mentioned it. So
yeah,
yeah,
it's a
it's up a lot.
It's a tiny company. There's just this big movement to move IV drug, 5-hour drips to 2-hour infusions in your belly, and you do it at home, and it's painless. Everybody that takes Ozempic knows you could put a needle in your tummy, take a drug, and it's painless. A lot of needle phobics used to be worried about that, but everyone's taking Ozempic is now comfortable putting a drug into their belly fat. So.
Yeah.
That's a good thing. It's a big trend.
Let's talk about the next one. What other 150% stock do you have for us?
No, I have a minus 25%er, and that's Telebio, which was the as I said when I invested in Tela, it was a lottery ticket because it was half a sales, and I told the CEO on my first phone call that to call his income statement a dumpster fire was an insult to dumpster fires. Okay.
I'm very like that.
So it was one of these. It's a company that has the hernia patch, and it's a hybrid. It's biological tissue with some filament plastic that's woven into it to make it more stable, and it's better than all the pure plastic, hernia patches that we all have. I have 2 of them in me, and one of them's sticking out of my stomach. I'm not so happy about that, but obviously it's a new thing. It's got a safer profile. We think it's only been around for 6 or 7 years, and it takes some time to judge that. But they've done maybe a couple 100,000 of these, I think, or over 100,000, and they seem to be doing well in the patients. And it sort of solves the problem of the normal one is all polypropylene, and that's not good for your body. And the other one is all tissue, and that's not stable enough. So they have a hybrid version that seems to be a good solution. It's very expensive to grow. They've gone from 5 million a quarter to 20 million a quarter, $80 million run rate in the last 5 years. But it's cost them $200 million in losses. This company insists on burning $5 million of cash no matter what. And they were supposed to change that. And as recently as 2 weeks before the end of the September quarter, they told people, and I bought the stock around $1.25 to from $1 to $1.40. So I'm in around $1.25, $1.30, I think. They had down from 6 and 16 last year and 3 years ago. And they had told people they were not going to need to raise equity. They were going to turn cash flow neutral within the window of cash they had on their balance sheet. They said it 2 years ago, and they said it last year. And then this year they said it, and they did the same thing. They raised equity. They lost more money than they were supposed to. They lowered their revenue guidance. The CEO is either completely, dishonest, and he told people something that was not true, or he's totally incompetent because he didn't know he was going to miss and cut the numbers so much. My guess is it's the dishonest, not the incompetent, because I actually like the guy, but he's a terrible manager, terrible cost control. And, it's just been a joke how he's been willing to incinerate cash over the last 4 years. He's very
I don't
proud of
know.
his.
I don't see what you like about him. It's amazing how he incinerates cash, and he's a liar. But I like him.
A lied cash incinerator, yes.
So, is there a future for this? Is there a future for this, or is it just leave?
Let me give you why I have. I have 100,000 shares. It's a lottery ticket for me. Okay, so the reason I own it is it's probably worth 4 or 5 times sales if you sold the business. That's the first thing. And when I bought it, it was half a sales. Now it's actually gone up, even though the stock's down, because they've sold stock and they've raised more debt and they've burned through more cash. So net debt's gone up. So with the capital infusion and the losses, it's probably closer to 80% of sales now. So that from 50 when I bought it. So that's still very reasonable. It's under one-time sales for a business that's 70% gross margins, and they said you grow 15 to 20%. Now they don't turn cash flow neutral until they get in the high 20s, and this next quarter should be in the low 20s. So they got to really ramp sales. They pushed out the date at which they were going to turn cash flow neutral, which is a big negative for me, because they had said first quarter of next year, second quarter of next year. Now they pushed it out to the second half of next year. So it's just, I got to grind through more loss bullshit, conference calls, and because you won't get paid in this until they turn cash flow positive. But they brought a team of sales execs from Abiomed, which was sold to J&J, and the team had taken a medical device from 15 million in sales to 500 million in sales under their tenure. So if there's a team that's hard charging and can do it, it's a guy named Jeffrey Blizzard. He was made president. He was very wealthy from his Abiomed deal. So I know of this guy through other companies that he's on the boards, and he's considered a superstar, a marketing genius, sales genius. So if these guys can get the sales ramped to where they should be with the money they spend, which is 20 to 25% sales growth, this stock, could be worth a lot of money someday. They want to get the business to 200 million. They sell the business at 4 times, 5 times sales. That's a going rate for sexy, high growth, high margin products in medtech. And that's, $1 billion market cap. Today, the market cap is less than 100 million. So it could be a 10 bagger. It really could, but they got to fix it.
All right. Well, it sounds like you have, so far you've given us, and Telebio, what's their symbol?
TELA.
So it sounds like you have one winner that's executing, and I don't want to call them losers, obviously, because they're trying, and one not winner that we have to wait on.
Yeah, the CEO tell a lot of bullshit too.
Yeah, that's why it's called Tela. But okay, tell me another story, Mister.
Right.
All right.
Right.
What's you had a third one? Is this the tiebreaker?
Oh my God! We're going to 10 stocks today. What's going on?
We all love natural gas. I've pitched a company, a mineral rights company called Kimball Resources, KRP. I pitched in the past at 14 when it has a $1.40 to $1.60 variable dividend. And if you want to play $5 nat gas and you think natural gas is going to keep going up, it's over half of their production, and you're going to get an 11 or 12% dividend, and it's at the low end of the range, which means it's de-risked. So if you need a boring company that could give you a 25 or 30% total return, if this natural gas trade really, keeps on jiving going forward, keeps on, running going forward, then KRP should trade from 12 and change to 15, and you get $1.50 dividend in the next year or two. So it's a safer stock now that it's at the low end of the range and trading double-digit yields.
All right. So
That's
WKRP or no KRP. All right. So we got 3 stocks there, Ben. I mean, that dates me a bit. I was going to make a Lonnie Anderson reference, but I figured no one would remember WKRP and Lonnie Anderson. But All right. So Ben, what do you have for us? You said you were going to talk about silver. What about
Yeah, I am.
silver?
I'm going to talk about silver. I just want to make a little comment on the KRP. I think I've told Marson that before. Those guys were in my office in 2018 when they did their IPO, and I kind of I was never really a big buyer in that thing, but I can understand Marston's theory there. The mineral rights guys in general are always interesting, but you just got to know their what acreage they have. On silver, so we put on a risk reversal, selling the 5850 calls to buy the 50 puts on SLV, the ETF. It was a weird situation because Friday, there was like this huge move in silver that kind of diverted from gold. And I talked about it a little bit yesterday with Bakes, because, Bakes was talking about how he loves silver because look at the chart. How could you not love silver? But what I noticed is at the end of these precious metal moves, the gold to silver ratio kind of dumps 40-50% off the peak. And the RSI, so the kind of the trading momentum was starting to diverge lower. So it was like, hey, we could see a reversal. It's down 3% today, actually. So it's kind of working. It was like only 10 cents to put this on net debit. It's probably $1 now, ish. And I just think that some of these moves you get excited and then they can reverse, and I don't know. That's just kind of an interesting thing that we did. The other thing I thought that was interesting today was that Meta, which I had shorted in.
Can I ask on silver, like for someone who doesn't trade, I mean, sometimes I'll trade gold. When I say trade, I'll invest in it, make a couple dollars, and run away. But silver just less than a year ago was $32 spot, something like that, and now it's 56. Did they come up with like some new use for silver? Is there something that we did all of a sudden silver run out or something? Because that seems like an incredible move.
It is an incredible move, but if you look historically, it makes incredible moves. That's what it does. It's this thing that you had the Hunt brothers in the late 70s, you got the move in 2011, you got the move recently. It kind of trades the way that one of these speculative stocks does. And the interesting thing about commodities, especially metals, where storage isn't as ridiculously difficult as it would be with oil, for example, is you can look at historical relationships. And basically when I think silver gets going is because the speculative demand for it is the incremental driver. So if you think about the marginal demand, marginal supply for a normal commodity, and silver is, I mean, Robert could chime in on this, I mean, it's an industrial metal, much more than it is a monetary metal. I think at one point there was a monetary use for it, but those days
But
are well.
that's why I asked, did they come up with a new use? Because I'm looking, I mean, this is just, I'm looking back. This is the highest price. I mean, even in the spike in 2011, we went from where we were before the 1130 to 37. I mean, we're good 20 points above where we were in 2011.
No, the peak in 2011 was $50.
All right.
My thought on commodities would be it's people real listen. It just dawned on me today. Listen to Knucklehead Kramer, my buddy Jim Kramer. He just wants to buy shit that's going up because it's going up. And I realize that the vast majority of the people in this world want to buy high and sell high. That really turns them on. No one wants to buy low. So when you challenge a bull market or a rally, you don't respect a bull market or rally, because you want to be contrarian or you have valuation sensitivities that most people don't give a rat's ass about, you're gonna get run over. So silver's as hot today because it's hot and people are bidding it up. There doesn't need to be a story. There doesn't need to be a new use. It's the latest game of musical chairs that people are excited about. So Ben, everybody wants to buy high and sell higher. You want to buy low. You two want to buy low and sell high. You can't think everybody thinks like that because we're in a distinct minority there.
But yeah, I was going to say, I think everyone here is in that. And by the way, just on silver, I'm shorting silver, right? Like I'm taking the other side, I'm selling high in order to buy low. I'm just doing
Yeah,
it in reverse.
that's my point. Is it looks like a ridiculously high price.
Yeah, it is ridiculously high. And look, to answer your question, the solar demand is an incremental growth demand for silver, but that's not like new. I mean, solar's been, solar install has been ripping in for a decade basically. So, um, yeah, I would just say that it's one of those things where when it becomes in vogue, just like any hot stock, there's not enough stock to go around, or there's not enough silver. Then you get leveraged like on it, and then you get Kramer pumping it, and then you just have this machine. And that's why we see charts look like silver, or they look like the spec stocks did, or they look like Abercrombie and Fitch did last year, or I can go on, right? Like you see this dynamic, and I think one of the biggest reasons why it works like this now is because of the prevalence of the option market that was not there in the past. In the last 5 to 6 years, the amount of leverage coming out of the Option Clearing Corporation, the OCC, is just like skyrocketed. And especially with the advent of zero DTE options, because you can manage the risk a little bit easier. You're not like taking inventory risk as much as you would have in the past. Is that like you can juice these things up so much, because if you're an option dealer selling silver options, like whoever sold me these SLV calls, well, you got to delta hedge your book. And then that on the way up, you have HIMS probably is another good example of this. Like your great stock call that you had, you got the retail demand, then you got the dealer buying it, and then you got basically not enough supply in the market to offset that. So you get these nonlinear convex moves up, and then you can see, as you've experienced in HIMS, it's not crazy to see a 10-20% drop. And so it's actually one of these things, if you know how to look for what to look for in these top tick like reversals, there actually can be very interesting shorts. Because again, when we think about buy low, sell high, why do we buy low? We buy low because it's like, hey, the asymmetry of the forward returns are in my favor, right? And no one likes to sell high and buy low, or buy low and sell high. They like to do what Robert said, which is buy high and try to sell higher, right? And so I just think about it like this thing has not a reason to be here other than just speculation. And I think that you can see a little bit of a leverage unwind come. And even if it's just a 20% move with an option structure like this, you can get paid quite nicely. And the last thing I'll say about this is, because it's one thing to just go short silver. There's a very large call skew in that, which what I mean by the calls are like a 25 delta call is significantly more expensive than a 25 delta put. So what you're really doing is you're taking advantage of that skew structure when you do a trade like this, more than just making a call on the spot price, if that makes sense.
Yep. So when you're buying the puts, what are you buying the puts on? What's the underlying security? Or are you buying it on the commodity itself?
The SLB, like
Okay.
very widely traded ETF. You have the GLD, and it's just an ETF where they actually store silver in a vault. You can see a daily NAV of how much silver they have in a vault and multiply it by the daily price from the futures or spot market. So it's pretty straightforward. But again, I kind of just view it as a vehicle of leverage. You started the conversation off talking to me about Bitcoin, and it's like these are just the dynamics you can see throughout the market, is these leverage dynamics that are expressed through the options and futures market, as well as some retail. But trust me, if we didn't have so much leverage in the market, we would not see these crazy stock patterns. There's not enough cash to drive this kind of behavior, basically. And people aren't this nuts. It's just like the prevalence of leverage, the ease of I mean, let me put it this way. There's actually a brokerage that now does box option strategies where you can go out deep out of money, or deep out, like deep, far out, like expiry box options, and you can pull out 600, 700 grand from the market to buy a house. It's insane. So like, the three of us, I bet you the most leverage we could find is from the options market, much more than from a bank or from the debt market, to be honest. And so that's where you get a lot of this stuff. And so you know how to look at things and you understand these things. There is a lot of opportunities, but again, you really need to know what you're doing
So when
because it's not.
when you're buying the puts on the SLV, are you going out a month? Are you going out 2 weeks?
These
What
are
are you?
January 16th. So what we did was we shorted the SLV was at $53. We shorted the 58.50 calls to fund the 50 puts. Okay, and so think about that, right? For 10 cents or something net debit, we were able to have our strike price $5.50 above spot. In the put side was only $3. So that extra 250 is essentially what we're arbing there. And I think there's a good chance of a spot reversal, right? So I have two ways to win, which is kind of like when we buy cheap stocks that also pay dividends, like ET, for example, back in the day. It was like, hey, if it doesn't do anything, I'm getting 12% dividend yield. I'll wait and see, So you want to, like, in general, have multiple ways to win when you approach trading, in my opinion, versus just speculating.
Yep, got it. All right. So
The other thing
that's
I
silver.
wanted to go ahead. What? Sorry, I apologize.
No, just saying that's silver. I'm just looking at the options now. So you said you bought the 50 something puts and then you sold. Say that again, just so that people know what the pair trade was.
Shorted the 58.50 calls to buy the $50 puts. And spot silver. What?
It's now a buck, that trade, you said?
Yeah. So it was like 10 cents net debit, and now it's probably worth like $1.10 or something like that.
Nice trade.
Yeah, life comes at you fast sometimes. But I just kind of like highlight this, not so much that our listeners or anyone should put this on, as much as these are some of the things you can do, and there's a lot of opportunities in these short-term reversals. If you're looking and look, you could also say, look at November 20th, how fast we've rallied back. I forgot to cover my IWM short, and then that obviously was a mistake. It was at 230, and I was covering a whole bunch of stocks, and I forgot to cover that one. Well, now it's at 250, right? Like things can move up fast too after oversold. So you could say, hey, we were oversold into November, and then it rallied back. So I think that's the thing that's interesting, is the veracity of the moves, and sometimes the option structure can give you an interesting way to play it, is basically what my point of talking about this is.
Okay, got it. What else do you have for us today?
I just thought it'd be worthwhile to talk about Meta for a second, because, in September, I had the view of shorting Oracle and shorting Meta on the idea that, this CapEx story would start to have a few bullets in it. But then I looked at Meta deeper, and I was like, man, these guys are just really spending a lot. And, the last quarter, so I shorted at 750, and then I covered around 615 or something like that. Last quarter, they had a good top line number, but they kind of replayed the 22 where they just were spending. And then so the stock gets re-rated from 750, and I think the low was 580 or something like that. And pretty much every day. So there were some big accounts, obviously, that were not interested in him spending their money with this crazy spending plan, right? And my view was kind of like, we're going to start to see spending cuts. Now, he didn't do it for his AI CapEx yet. He did it this time. They announced today the stock's up like 6% for the Meta Labs, right? So he changed his name to Meta, the Metaverse. Remember all that? We're all going to just live with our goggles.
We're gonna walk around with glasses.
Yeah, exactly.
We're gonna shop. We're gonna do our grocery shopping by walking through virtual aisles and with these heavy glasses on. Yeah, doesn't happen.
But I guess it's not really so much other than I like to poke fun at him about that. But like that cutting spending, is where I think we're going to have things go. And, Robert and I talk a lot. Ed Zitron's done a great job of chronicling this AI CapEx spend. And he's highlighted, and Robert and I like to talk about like how ridiculous it is. I think that, when you look at Oracle's credit default swap spreads, and you look at what Meta just had happen to their stock, and you've seen CoreWeave and some of these things, the market's kind of like, debt funded CapEx spending, we're not so interested in it. Now, you can do that and become a telecom if you want, but we're going to have to re-rate you to be trading much closer to a telecom, or you're going to have some telecom-like part of your valuation, if that makes sense. And so I think that like it's just a good litmus test of, hey, if you cut spending, how does the market treat you? If you increase spending, how does the market treat you? And so Meta is a very good test case or illustration of a stock that was absolutely punished for excessive spending, and now you got a little taste of, hey, if you bring it back in, this is how the market will treat you. So that's I thought was worth highlighting.
Yeah, I wonder how this whole spending retraction will go. Will Oracle pull back? Who will pull back first? Will it be gradual? Will it be Apple coming out saying, "Yeah, we're just going to license in. We're not going to spend $1," which seems to be their approach. You start to get others that just say, I mean, others that are pure plays, they can't back off, right? Because then they don't have a business. So it's
Also, yeah, I think that's what's going on, right? It's very interesting because there's been a divergence in the last month or so where the open AI complex has gotten sold and everything that's more aligned with Google and their TPUs has gotten bought. And maybe that went to an extreme. But then it's like, I just kind of wonder, like, we're so early in the stages of this. Have you guys ever seen the market care more about market share this early when there's not even a discernible ecosystem and revenue model versus total addressable market size? And so then it makes me think like, well, maybe the market's not really sure if there is a true return on investment here. So the actual business is just the CapEx boom itself. And then you think about who are the beneficiaries of the CapEx boom. Now, some of the stocks like Robert's talked about, like Vertiv and some of these equipment manufacturers, the HVAC guys, they're completely tied to it, right? NVIDIA is like completely like printing cash, like hand over fist, but they're just basically taking the money from these guys. So the question will be, how long can this last and at what margin structure, basically, right?
Yeah. Well, I will tell you, I'm a heavy user of all of the models, and I tweeted out the other day that essentially Google, Gemini is now 80% of what I'm using. I don't even know what I'm going to use the others for other than things that I've done previously, and I don't want to transfer it over. But today I started using their agentic AI for like mailboxes. So you can use it for free if you have a Google account. And I said, okay, what emails do I need to pay attention to today? And it gave me a list of like 6 things that are to-dos, like the electrician, you never responded. Can you tell them to, what date to come, and things like that kind of go through. So there are use cases. Would I pay a lot of money for that? Absolutely not, because I know that Google's going to give it to me for free at some point, and then it's going to be sticky. So there might not be an ecosystem market share wise just yet to really think of, well, where will you use it? Won't. But the number one place is going to be just productivity and email boxes that are just too full and they can streamline it. At least for me, that's going to be where I use it. Will I use it to shop for a new tie or a new jacket or something? Absolutely not. That's probably not going to happen. So, but it's fascinating. I will just mention 2 quick things. I bought OWLT yesterday, actually last week, and then I'll talk about that next week when I'm on to talk about stocks. But little baby monitoring company out of Utah, and it's a pretty interesting one. The other is a to-do for Ben. Ben, you love spin-outs. I own Sony Financial, which spun out earlier this year from Sony. Everyone puked it because who wants a spin-out? Wondering if that might be interesting there. So something to take a look at if you have a minute, because you're good at those spin-outs.
All right.
But everyone have a great Thursday, if that's possible. And knowing that Friday is right around the corner, end of the week, have your Einstein bar, which is our sponsor. Eat that and feel better. And then after you eat that, sign up for Wall Street Beats at wallstreetbeats.com or passes.com/wallstreetbeats. You'll get a lot more than what you just got. I don't know if you're going to get a whole bunch of 150% Robert Marson picks, but you'll get a few of them at least.
I had an Einstein bar for breakfast. It made me smarter today than otherwise.
Yeah, they're right. There we go.
No wonder.
Very tasty. Very tasty too. I
I
highly
had
are.
recommend.
my mother just bought some on Amazon. You can go on Amazon and find them.
I had actually bought them before I knew that we were affiliated with them.
Yeah, I bought them too. Harder in cash. So, well, everybody have a great week, rest of the week, and we'll see you next time. Wall Street Beats.
Thank you, guys.
Thanks,
Thanks.
Ben. Thanks, Robert. Thanks, Jen.